Good evening, my fellow Riz Elite members. This is Chris with Riz International, and this is your weekly market recap. Well, amid a bit of questionable circumstances in the market, we hit an absolutely new all-time high in the S&P 500 on Friday at now $4,440.82 for the S&P 500, the new all-time high. We did kind of recoil off of that and pulled back a little bit towards 44.36 for the close on Friday. But yeah, so amid an infrastructure bill that is questionable whether it will get passed or not, amid Delta variant that is starting to spread and, differing reports on how bad that is, the market is making new all-time highs. So I talked with Riz about this afternoon, and one of the things that we kind of discussed was the real important thing right now with all of these things going on, there is a lot of uncertainty right now. There's a lot of uncertainty as to what direction the market wants to go. Now, I mean, if you're looking at this in abstract, like let's just zoom in here. And, if you have this really short time frame like this, you're like, well, Chris, obviously the market is going up. And, you wouldn't be wrong, in that assertion. The market is definitely going up, and it has respected my channel pretty much until this drop right here, but it came right back in. That being said, Riz and I really want to emphasize more caution. Right now, we keep hitting all-time highs over and over and over again, and we keep making a new one, and then we come back. We make a new one, and we come back. Let's just say that now might be a really good time to build your cash position. Might also be prudent to take a hedge against something like the market or something along those lines. Riz may be posting that later in Discord. We'll have to see, but. And definitely right now is the time to be taking profits earlier. As we keep seeing this push towards the upside, but we have all these negative catalysts in the market, it does make you kind of scratch your head a little bit and go like, okay, what's really going on? And we really want to be very cautious right now. As far as, holding things long-term, things like that, as we keep making these pushes up and up and up, it really feels like it's time for a bit of a correction. I thought we were going to get more of it here. Obviously, we didn't. But, no one here is calling for a crash. No one's calling for a depression or anything like that. So I know people are probably typing down in the comments right now, on YouTube, like, oh my gosh, what are you saying is going to happen? Everybody freaks out when they hear the word, correction, things like that. But you got to remember, corrections are natural. They're needed. And it's just part of the market cycle. And we'll actually see that in one of our commodities today, because Friday was particularly brutal towards one commodity, but we'll get to that in a minute. But it really is a time to be cautious, guys. It is definitely a time to really, just be careful with what you're putting money in, and we highly recommend taking profits sooner. If Riz does take a hedge against the market or any other asset, I have no doubt that will be posted as an alert in our Elite Discord channel, so you can definitely keep an eye on that. But it is definitely a time for caution, and that is the one thing that we really want to emphasize on this webinar. All right, let's go ahead and take a look at the breakdown here for the S&P 500. It seems like we've been a bit of a broken record lately, but with this big dip in energy here, it has allowed real estate to be the top dog right now, up 32% on the year. And I'm sure if you've tried to buy or sell a home lately, you have noticed that. For sure, housing prices in my area are absolutely through the roof, to say the least, but also commercial real estate, from what I understand, is also pretty high as well. Financials and energy are basically right on top of each other right now, right around 30% on the year. Tech is now outperforming the market. It was last week, and it continues to push upwards with pretty decent earnings results from those tech firms that have come out so far. S&P 500 itself is just south of 20%, sitting at 19.98% positive on the year. Healthcare lagging a little bit by about 2%, sitting at 17.7%, and utilities, the bottom dweller right now at plus 10.36%. So, the market is pretty well steamrolling here, and things are looking really good. And that's, when you see something that just keeps going up and up and up and up and up, you kind of wonder at what point you need to, be careful. Let's see. Yeah. So you see the market just steamrolling here, going, constantly up. It definitely makes you pause a little bit. And that's really what we're trying to talk about mostly here. So we're going to have to wait and see how things pan out. But I was telling you about something that took a bit of a beating. Look at gold. Holy cow. Gold got absolutely slaughtered on Friday. Oil taking a bit of a pullback here, and not too surprising with Delta variant, being in the headlines and things like that, especially with an infrastructure bill, questionable. These things, would definitely, work in or against rather oil's price. So a bit of a pullback this week on oil. So coming back down here towards the 68 area. Looks like we closed on Friday at 68.28, so just above the 68 mark. Finding support there on that whole dollar, not too surprising, but definitely, looking like we are sitting on support right now for oil here right around 68. So gold took an absolute thrashing on Friday, and I was digging around trying to find a reason for this, and I had a lot of people scratching their head. I did find this article on Market Watch. Basically, what they are suggesting is that it is the unemployment numbers or the employment report showed that we added jobs, and that could in turn, mean that they might look towards increasing interest rates, and so that is something that will definitely affect the market if they talk about interest rates and what direction they want to move them. And so that looks like it caused a bit of a sell-off here. There was also some other speculations as to why gold took as big of a beating as it did. There was, as I read in another note, that the Fed was a little bit hawkish on their announcement. And so it looks like gold took a bit of a beating here, to say the least, really taking a dive. Something that's not taking a dive right now is cryptocurrency and Bitcoin really rocketing here. We came up here, we bounced off 42,000 last week, and we're coming back down, really respecting the 90 here. Was very impressed on that, how well it respected the 90 moving average, but really just bounced right off of that after that beat down here over a couple days. We had 4 red days in a row, and then starting on the 4th, after that, it has been all green for Bitcoin. Looks like we just started a new day. We are running into the 200 simple moving average right now, so we will need to keep an eye on that moving forward. But Bitcoin looking very bullish right now, really pushing up. Pretty solid on that. Now, I have a couple of trade ideas for you, things that you could consider potentially taking, though we are not recommending that you take them just yet. The first one is Zoom. This one, of course, had its heyday during the height of the pandemic. When they did their IPO, skyrocketing up to, about $5.75 a share here at the end of October of last year. Has been a bit beat down, but really looking nice right now. Coming down here, bouncing off the 50, kind of curling up from there. And right now, taking a bit of a hit yesterday on the market, but could potentially give you an idea or a potential area to get in on Zoom if your account can handle a just sub $400 stock. I know not everybody can take, a large position in a stock like that. For those that can, this is something that we are looking at this week. We have not taken a position yet in Zoom, and we're not saying that you should, but it is definitely something that is on our radar. Another one that I can't believe that Riz actually put on the list here is BYND, Beyond Meat. This is one that Riz has been a pretty big, definitely not a supporter, we'll just say, of this company since its IPO back here in, let's see, because I remember when this IPO'd, and there it is. Back in May of 19, I know Riz was very bearish on it. And yeah, looking interesting here, though. I'm going to tell you, I really am not too excited about this one, but obviously a really big push here. How bad was earnings? Okay, earnings was down, so they are still negative on earnings. But making a nice rebound here on Friday could potentially be pushing for a rebound. So, again, this is another one that could potentially set up for a good trade. No, we're not shorting, Matthew. I wouldn't blame you if you did, but looking, like it wants to push here. If it continues to push on Monday or Tuesday, it is something you could consider taking a position in. Again, we have not taken a position in this, and we're not saying that you should either, but something you could keep on your radar for this week. Another one, DraftKings. Another what I would call questionable stock, but definitely something that you can swing trade and make money on fairly quickly. So it looks like we IPO'd back here in 19, didn't really do much for a while. And then everybody got bored in the pandemic and started betting on sports that weren't happening. Just kidding. There were other sports that were happening that people were betting on. Yeah, DraftKings has been a very interesting one here, to say the least. Looks like we're kind of just sitting right below, actually, that 90 moving average. We came up to the 200 when we rejected. Now, if we continue to curl back upwards, this could present a decent entry here on DraftKings. Again, I'm not too super jazzed on this, and with the way the market is behaving, I would be very cautious adding to your portfolio at this point, but definitely one you could keep on your radar for this week, something you could consider taking a long position in if you so desire to do so, or you thought that the setup was good. But it is something that we are keeping on watch this week. All right, I want to go ahead and open it up to the floor. I don't want to keep everybody super late. I do have a little talk that I'm going to give you a little bit later here when we're done. But I want to make sure that we get to your guys' questions first. For everybody who came here live, anything you want to look at, talk markets, things of that nature, go ahead and post it up in the comments. Let me know if you have a ticker or something you want me to take a peek at. Go ahead and post it. More than happy to answer all of your questions. RBLX. Okay, Roblox, the video game thing, like the Lego people, right? Kind of like Minecraft, but different. They make little obbies and things like that. I've seen this on like YouTube Kids with my daughter. She watches some of this. Can't say I'm a huge fan. As far as the stock is concerned, obviously a very recent IPO here, just in March of this year. There's really not a whole lot of data for me to look at. I will say that, based on the wicks on this thing, this is very whippy. This has some major whipsaw in it. Looks like, support here right around 75, 76 seems pretty solid. But, we're in a straight downtrend here, to be completely honest with you. This is just like a beautiful downtrend right now. I would be incredibly careful if you took something like this. I would not personally recommend taking a position in this right now. If it were my money, I would not, based on this pattern. It doesn't look too spectacular. Yeah, I would want to see it break over this line before I would even consider taking a position in this. And by breaking, I mean closing above it. So, I want to see like a candle. Okay, can I get the thingy? No. Okay, yeah, I don't want that. I want it. Let's go with green. Green seems good. I want the candle to look kind of like this. It's a beautiful candle, by the way. That bottom wick is a bit longer than I expected. Can I move this? Oh, sweet, I can move this. There we go. Drawing with Chris. That's what we're doing right now. Okay, I can't make it shorter. That's unfortunate. Okay, we're just going to put it inside the body there. Okay, you get the idea. I want the candle to close over the line and be, making a move towards the upside. Let's just remove those drawing tools. We can get that out of there. But yeah, this one, I'm not super jazzed about this one. If you want to keep it on your watch list, Jackie, absolutely. Totally doing that. We also have earnings coming up here. They're estimated to make positive earnings this year. Yeah, the estimate last time was 0.8, and they missed horribly by 600%. I'm not sure if that number is completely accurate. Again, these numbers on TradingView can be questionable at times. But yeah, missing that bad, and then all of a sudden saying, oh, our estimate's going to be, plus 12 cents per share. I'll believe it when I see it. Show me the earnings report before I believe that they're actually going to make money on this one. I wouldn't. Me personally, I wouldn't. I'm not too super jazzed about this one. I don't like buying stocks that are in a straight downtrend. I've done it before, and I've gotten burned pretty hard by it. So It's something that I don't typically recommend, but if you think that this is the bottom, and if you think that it is actually going to start curling up here, you could take a starter position if you so desired, but I wouldn't personally. Do I think that NTDOY would be a good entry, or should I wait for confirmation? All right, well, let's take a look. Nintendo. I hope you're talking about shorting. If you're going to knife catch, this ain't a time to knife catch, Matthew. I would not touch this thing at all. Not right now. If you're looking for a buy the dip, obviously they got punished hardcore on earnings, and it looks like they beat estimates, and they just got absolutely decimated. That's a beating. If you're waiting for the dead cat bounce, I would like to actually see the dead cat actually bounce before we get there. But Nintendo being absolutely blown away here right now. Probably because they're really not putting much out of anything and putting much of anything out. I haven't heard of any big Nintendo hits lately. Of course, I don't have one, nor have I been a huge fan of the company. So, it kind of looks like somebody jumped on the Goomba. I'm just going to put it that way. I would wait for confirmation on this one, buddy. I would not try and knife catch this right now. If they're getting that punished by good earnings, I have no idea where the bottom is. Let's look here. So obviously we found this support level here right around 59. We'll say. Where's my horizontal line? Looks like we got some like right here. This is kind of where it hit. Maybe some in this area. So, if it finds support out of nowhere, which it can, it definitely can happen if people think it's a good place to buy in on Nintendo. But I would not recommend buying this one right now. This could continue to go. So be very, very careful. If you do take this and you do think that it is going to rebound eventually, or you want to hold it for the dividend, which looks to be pretty decent, then you definitely can. Looks to be something around 70 odd cents per share typically. Oof, that was a rough dividend. But yeah, it's something you could consider, but yeah, I don't know about that one. Jackie, let me hold on to mRNA because we're actually going to talk about pharma here at the end, and we can use that as an example. All right, my thoughts on the solid support level on DLTR. Thank you in advance. Absolutely, you are welcome, Liam. Glad for the question. Yes, looks like DLTR has found support very nicely right about here. Seems about right. Looking really good. Obviously, the 50 crashing down right now, and 50 is being respected at the moment pretty significantly. But yeah, you definitely have some support here right around 97.50. And again, nice psychological support level there. Looks like we've had multiple hits there. So yeah, it definitely seems like a triple bottom at this point. Yeah, 1, 2, 3. You could even say 4. But I mean, solid hits are here, here, and here. So yeah, I mean, it's definitely found support, but it also can't find the upside either. If it breaks below that support line, I would not want to be holding it. Other than that, yeah, I mean, your next stop is probably going to be about 96. Looking, at the candles here. So if you want to take a starter position, you can, if you so desire. Just be aware that it is having problems breaking the 50. If it breaks the 50, then, I mean, there's definitely potential upside on this. It definitely has been beat down from earnings here. It looks like the next earnings are coming up, which is, surprising here. They beat and they get blown away. Must have been guidance. That's the only thing I can think of. Again, I haven't read the earnings report on this, but you've got a couple weeks until earnings here. So that's good. Hey, no problem, Matthew. Glad to help. But yeah, this definitely isn't bad. I think it's definitely a decent setup. If the 50 continues to be respected, it will continue to crash down. And that is one thing that we do need to keep an eye on. But if it can beat that, I think there's definite upside. All right, let me do a little monologue for you here that Riz asked me to talk about. And we can talk, we're going to talk about pharma today. We're going to talk about big tech. We're going to talk about pharma, big pharma. These are all words that will probably get us banned on YouTube, but that's okay. So mRNA, what are my thoughts on mRNA? Extended, don't buy this. Don't short it either. Way overbought, but I remember we were talking about this before. Somebody was asking, should we short this because it's overbought? If we had shorted it when they suggested, we would still be holding the bag. We'd be getting our ass handed to us right now. And this is exactly what I'm talking about. Stocks can stay overbought for some time. And you are seeing that right here with mRNA. This is not something I would touch with a 10-foot pole at this point. You do not have an entry in mRNA at all. And I think you're finally starting to see the vaccine numbers starting to hit. People are, there's getting more and more people vaccinated, so more and more vaccines are needed. People are buying into this because they think that mRNA has the keys to the kingdom with their whole, mRNA input or pipeline that they're looking at doing, things like that. That being said, let's talk about pharma, because we had a really interesting chat in our team chat earlier about Pfizer, PFE. So I want to go ahead and bring this up. This is one that we've been holding for quite some time, and it has been an absolute pain in the butt. It did not want to break out of about this area here, this like 39.40 area, and has finally busted through and is making the move. Of course, Pfizer was the first company to bring forth the coronavirus vaccine, and everybody thought that they were going to just go nuts. It was in this area here, if I'm not mistaken, the 9th of November 2020, that the vaccine was given emergency approval. If memory serves, someone can correct me if I'm wrong on that. But yes, this was the day that it happened. And the question was asked, okay, if these companies are so, fundamentally solid, right? Pfizer, probably one of the bigger, big tech, big pharma, not big tech, excuse me, big pharma companies out there, brought us the little blue pill. Obviously, they took one here. That's why it's doing what it's doing. But the question is, why is it not outperforming the market? I mean, you've got the company that made one of the vaccines that is approved here in the United States. Why is it not doing better? Why is it not doing what Moderna is doing, like this, and going just straight up freaking parabolic, since about 2020? But even then, more so here, obviously, this is really where it started. So more so since about the beginning of July. Why is it not going absolutely nuts? Would I say that AbbVie is a great long-term dividend stock at its current stock price? That's it. Looks to be getting beaten down here a little bit post earnings, even though they posted positive earnings by quite a bit. How's the dividend looking? $1.30 a share. That doesn't suck. I mean, yeah, the dividend is very nice. Looks to be in a pretty decent uptrend. I mean, I'm not super jazzed by it, but I don't hate it either. Yeah, I mean, I think AbbVie looks pretty decent, all things considered. If you wanted to take it, you definitely could. It's definitely something you could consider. But I want to go back and talk about big tech, or big. I keep saying big tech. That's the buzzword right now. I apologize for that. Big pharma. That is what we're talking about, right? And we're talking about pharma. We're talking about drug companies. And I wanted to talk about this because you may or may not know that I actually have a background in pharma. So before I started doing what I'm doing, and I don't mean that as being part of Elite. I mean my current day job, which has me working from home. Before then, I was actually in science. I have my bachelor's from Indiana University in biochemistry, and I worked in the field for about 10 years after graduation. I want to talk about drug development today. This is something that I was part of during my time as a scientist, as a biochemist. For the last half of my career, I was working as a contractor in discovery metabolism. Now, discovery metabolism is pretty much one of the last steps before a drug will actually go into radio-labeled studies, which is the first phase of human clinical trials. So we were pretty much the gatekeepers. And I want you to understand that drug development is something that a lot of people don't understand, and a lot of people complain about, primarily drug prices. Everybody's ready to go to, basically crucify, for lack of a better term, these big pharma companies that charge the prices that they do for the drugs that they make. So I want to talk about why that is, and kind of give you an explanation as to why sometimes these pharma stocks behave the way that they do, which is not the way that you think that it should behave. Because you would think, okay, here, are we on Pfizer? Yeah, we're back on Pfizer. Let me back out a little bit. You would think like right here, oh my gosh, their vaccine got approved. They should just go like up here, right? To 56, $100 per share, something like that. And it didn't. The main reason for this is the drug discovery process. There are numbers that are thrown around as to how much it costs to bring a drug to market. Typically, what it will take is about $2 billion to bring a drug to market. So to go through all of the pre-clinical work, go through the clinical work, submit to the FDA, go through FDA review, and eventually be approved will typically run you about $2 billion. I want you to think about something here. Out of the, and I'll explain to you how this works, because it's not what you think. Okay, it's not like you think, okay, we're going to sit down. It's not a bunch of scientists sitting around at a table going, okay, how exactly are we going to cure the coronavirus? Oh, we're just going to do an mRNA vaccine. Okay, no problem. Let's just start working on that. The way that drug discovery works is you typically have a target on a particular disease that you are going after. And you are going to basically chemically engineer a molecule to attach to that point on said, virus, disease, neuron, if maybe you're looking at something like Alzheimer's. And we'll stick with Alzheimer's as an example because I have some pretty close, stuff that I can share with you guys about that, because I've worked on quite a few drugs that were slated for Alzheimer's that never saw the light of day. And what you do is you will build small molecules out of, smaller pieces, smaller building blocks. So I'm not going to get too big into the chemistry because I know a lot of you would probably have your eyes glaze over at that point and you'd fall asleep, and I would have no one comment after the webinar is over. So I'll spare you that. But basically what they do is they will start producing these molecules that they think will affect said receptor site on virus, bacteria, cell, whatever it is that they are targeting for this drug. And then what they will do is they will start doing testing. They will do testing what we call in vitro, which means in the lab, in test tubes, and then in vivo, which is in living things, typically. So usually we're talking mice, rats, dogs, and monkeys are the big four, with most of the work being done in mice and rats, because dog and monkey studies are incredibly expensive. But you need to think about this. They are putting all of these molecules through these tests. These tests aren't done for free. Okay, a lot of them require very expensive materials to be run. A lot of the in vitro work is done in basically human hepatocytes or other animal hepatocytes. Those are liver cells. And those aren't cheap. You have to buy those. And then you have to have a chemist, somebody do the incubation. Then someone has to do the analysis. On a piece of equipment, I might add, that costs about $250,000. So you kind of see these costs adding up and adding up. The thing that people don't remember is all of those drugs that didn't make it, that money just isn't refunded. All right. So yes, it takes about $2 billion to bring a drug to market. How many drugs fail and I can tell you the answer is hundreds, before they actually even get submitted to the FDA. And so it is hundreds, guys. It's literally hundreds of drugs that get rejected before they even make it into clinicals. And there are many that get rejected after they get into clinicals. I could look up the numbers. I don't want to bore you with them. The long and the short of it is a lot of people complain about, like I said, drug prices and things like that. And those obviously will reflect a pharma stock, how it behaves. And you see this especially with like basically BS pharma stocks. So not like your big ones, not your Johnson and Johnsons, your Pfizers, your Eli Lilly, even AbbVie, things like that. When they release clinical trial data, these BS biotech companies will just go crazy one direction or another. Day traders use them all the time. It's basically a lottery ticket. Please, for heaven's sakes, don't make those plays. Trust me, I've tried to do it. It doesn't work. You'll get crushed more often than you don't. But what happens is, to submit a drug to the FDA, you have to basically you have to write publications about these drugs, all right? And in part of that, getting your work published in a publication, it then becomes part of public knowledge. If you don't have your drug patented at that point, someone else can swoop in, take your molecule, and then start making it on their own and basically use all of your work, and you get nothing for it. So obviously you have to patent your drug before you make any type of publication. And as many people know, patents have a limited lifespan. Now, what's going on is, before you go to clinicals, you have to submit the patent for the drug. Then that includes the manufacturing process, how you actually make it, because that has to be included in the patent. And then that's all made part of public domain. Everybody knows about it. Now, no one can make that drug and sell it because that is your patented drug. They're not allowed to do that. But the problem is, clinical trials are not done in a week. Typically, they will take years. There's 3 phases of clinical trials. And sometimes you can even go more. There's phase 3, phase 4 clinical trials, things like that, where we have, human trials and things of that nature. The amount of money that goes into those is astronomical, guys. These all take time, and they take years upon years of data to go through. Now, whether that's good or not, is up for debate. I will just say thalidomide. And I will say that, yes, the FDA process is definitely required. It's definitely needed for these new drugs that are coming to market. Now, like I said, time is passing while these clinical trials are going on, and your patent is getting closer and closer to expiry, and you're not making any money off this drug while it's in clinical trials because nobody's paying you to do it. Once you have something that's actually approved by the FDA, typically you'll maybe, if you're lucky, have about 7 years left on your patent. And that's off of a 20-year patent. So it's one of those things that takes a very long time to get done. And companies only have a very short window for which they have to be able to make money off of, these said drugs. And so it's one of those things where it's a very difficult balance between what you charge, because you need to be able to keep your people employed. You have these pharma companies, the amount of people that they employ, and they give a livelihood to is considerable. Hundreds of thousands of people. You've got scientists, you've got, organic chemists, you've got, you've got the janitors who are cleaning the building. You've got the contractors, like I was back in the day, that you're, basically using to replace some of those more expensive chemists that you didn't want to pay for. You've got, your whole legal team who's writing your patents, who's, making the, if somebody copies your drug, they will go and, basically claim the patent infringement, things like that. And, these things aren't cheap. Now, of course, you may be like, oh, yeah, Kristen, you've got all those executives who have their yachts and stuff like that. Okay, yeah, I don't disagree with you. I think there's definitely a problem with that in general with big companies, not just pharma. But what I'm trying to say is you have hundreds of thousands of people's jobs on the line here, and they have to charge something that will basically recuperate the costs that have been lost in the drug development process and the trial phase of these drugs. And the stock price, even if you have something approved, actually, let's just not LLU, LLY is what I was going for. Pull up Eli Lilly. Eli Lilly's been on a bit of a tear lately as well. Pharma in general has been pushing pretty hard. But you don't see these massive moves in pharma, is what I'm trying to say, because yes, they are profitable, and yes, they are doing a good service, in my opinion. Riz and I talked about this, and it's like, they're actually doing good work. They are putting out things that are keeping us healthy. They're putting out things that are helping us in general to live longer lives. I mean, I don't recall any of us having to be in an iron lung. I don't recall many of us having to deal with that. We have the polio vaccine, and of course that was developed a long time ago. But they give us these things that 50 years ago we could have died to, and cut your life short. And they're doing great things. So why invest in pharma if we're not seeing these big moves? Well, again, it's all about the drug pipeline. Right. So if you have something approved, you can have big moves like this. Obviously, there was some news on Lilly this day. I would need to go back and look. I don't recall what it was, but obviously there was some positive news catalyst with this volume spike. I'm guessing some type of approval or something like that. And they can definitely move pretty big. The other thing to consider when investing in a pharma stock is the dividend. Very, very nice typically on these. They are, they're doing the job. They'll make the moves, and it's something you can definitely swing trade, is what I'm trying to say. Now, you can definitely hold these long term. I mean, let's take a look here. Let's zoom it out here on Lilly back to 2012. Looks like we're about $40 a share. Now we're at $260 a share. So definitely something that I think that you should probably keep inside your portfolio. If you're looking to invest long-term, I'd highly recommend looking at some pharma companies. Not saying you should just go dump everything into it. It's just a suggestion, something you could consider. You definitely have the dividend going on, which is very nice, to say the least, getting that free money to come in to your account every time that they have an ex-dividend. But just kind of wanted to give you guys a brief understanding of what the drug discovery pipeline really is. But if you want to think about it, think of it like this. Basically, drug discovery is an ever cinching in cow chute, for lack of a better term. You got this cow chute, and you have all these drugs coming in here, and then you start getting to less and less and less and less and less until you have the one or the two that make it through here. And usually for most companies, it is about one or two per year. And the big question is about efficacy. Does it work for what they're trying to make it do? And that is, when I was mentioning earlier, I talked about the Alzheimer drug that I worked on. There was an entire classification of drugs that Eli Lilly was working on. And this is all public knowledge, so I'm not giving you guys any insider information here, so don't think that. And this was years ago, by the way. They were working on a molecule called BACE2. And it was for Alzheimer's. Now, they actually had one that worked really, really well. The only problem was the side effects were absolutely horrendous, like holes in the back of your cornea, things like that. So obviously, it was one of those ones that died in clinical trials. I can't tell you how many BACE2 molecules I worked on while I was in discovery metabolism. It had to have been at least 50 to 60. And if you think about how much time, it took, how much energy, resources, cash it took to get those molecules made and constructed, and all the trials that they went through to get there, it's one of those things where it's like, they do have to charge a lot for their pharmaceuticals that they put out, because if they don't, they're going to go out of business. That's what it is. People always think that drug companies are profiteering and something like that. Listen, yes, we live in a capitalistic society, okay? You need to make a profit if you want to keep your doors open, if you want to keep your people employed. And it really is almost kind of like a shotgun technique with drug discovery. You have a target that you're shooting at. You have your ideal buckshot that you want to shoot at it, but you've only got this tiny little pinpoint that you have to hit with your shotgun shell. Now, if any of you have fired a shotgun before, it kind of looks like, this is a terrible representation, by the way, but it's the best I can do. You have a spread, right? Well, what if your target was right here? All of these other drugs missed. And so it really is right now the technique that they use. It uses the scientific method and things like that. It is effective, but it is costly. And it's just one of those things that you have to go through. A lot of people don't understand. And most of it, in my opinion, I think personally, if you wanted to solve some of the issues with drug prices, my opinion, drug patents need to be extended past 20 years. I think they need to be considerably longer, because once a drug goes off patent, the company takes a massive income hit. And I mean massive, because the generic manufacturers come out, they swoop in, they grab those patents for Viagra, Cialis, Lipitor, what else? Benadryl, things like that. Come in, swoop those up, and make something that's half the price or less, maybe sometimes even a quarter the price of what, say, an Eli Lilly or a Pfizer charges for their brand name, drug, and they basically undersell them. So it's one of those things where it's like, for pharma companies, they need to keep having these blockbusters to really see like big moves. And we call a blockbuster, it's a drug that, really does well, right? That really hits it. It has very high efficacy. It gets recommended a lot. A lot of people start using it. And the truth is, guys, all of the low-hanging fruit is gone. Okay, you look at things like chickenpox. You look at things like, allergy medication. You look at things like, ED. You look at things like, like cold medication, things like that. All of these low-hanging fruits have been picked off. Cholesterol with Lipitor. All of these easy diseases, for lack of a better term, have already been picked off. And we've got about as good as we can get right now. And it's unlikely we'll find something that does even better than what some of these drugs actually do right now. Now the pharma companies are focusing on the big stuff, okay? And it's the hard stuff. It's stuff like Alzheimer's. It's stuff like, new viruses, vaccines, things like that. It's looking at things like osteoporosis, things like that are incredibly difficult to treat. And I mean, of course, they've been looking for, on other things for a while, for a long time. You've got things like, like HIV and, Ebola. Of course, they're working on that. I have heard there is an experimental vaccine for Ebola right now. But they're tackling the hard stuff now, and they're having to get increasingly more advanced with how they are trying to attack these. And not only is it complex, the more complex it gets, the more expensive it gets. So when you're talking about doing things like, monoclonal antibodies, which are huge, it has the, the ability to basically be a one-time injection, and you are good for 6 months. The problem with that is, if you have side effects, you have side effects for 6 months, and there's nothing you can do to get it out. So monoclonal antibodies are probably the new big thing on the block. Large molecule drugs are the new hotness, for lack of a better term. I know I'm getting more technical now, and I'll probably stop here in a minute, because I suspect many of you are drifting off into sleep, and that's not my intention. But what I'm trying to say is, yes, pharma in general, healthcare stocks, pharma stocks like Eli Lilly, Pfizer, things like that, will typically not outperform the market. That does not mean that they should not be in your portfolio. I would say if you're looking to build a long-term investment portfolio, I think you would be very remiss if you did not have at least some pharma in there, because of the dividends, the fact that they are doing good work. They are a fundamentally sound company, as long as you're not investing in BS pharma companies. But if you're investing in the big boys, Johnson & Johnson, Eli Lilly, Pfizer, AbbVie, Fisher Scientific, I'm trying to think of some of the other ones off the top of my head. Those are the ones that are coming to mind right now. I think I said AbbVie already. If you're getting into those and you can hit a good entry, like right now on something like Moderna, this is not a good entry. Okay, I'll be straight with you. This is a really bad flipping entry right here. But, if you had gotten something, closer, in this area here, like in the 160s or something like that, when it wasn't so flipping extended past the moving averages, could definitely be something that you could hold for long term, or it could be something that you could just swing trade. But just because they aren't outperforming the market doesn't mean that they don't do a service, they don't do, good things, and they aren't, fundamentally solid, or something that you should definitely consider. So that was my little pitch on Pharma. I wanted to give you guys an understanding a little bit of the drug development process and what goes into it, why drugs cost what they do, and, why, pharma companies have to capitalize on them when they can. And I understand that it feels like profiteering. Lots of people are like, oh, they should just give it away for free. Okay, who's going to recoup the billions of dollars that these companies put out on their own to, do the development on all these other drugs that failed, and just the drug itself? If let's say, for example, the COVID vaccine that Moderna came out with, the mRNA based vaccine, didn't work and it wasn't approved. No one's going to give them that money back. You can't do a chargeback, on your credit card. Okay. You don't have your pharma credit card that you get once you get, your pharma company made. This is okay. Just put all your costs on this. And then if it doesn't work, we'll just give you the money back. Sadly, it doesn't work that way, guys. And Moderna would just be out that cash. And that's all there is to it. They've got people who need jobs. And I understand that a lot of people like to vilify big pharma companies. I'm not saying that there isn't profiteering going on, and that sometimes I feel like their prices are a bit inflated. I'm not going to say that I don't feel that way too, but I understand that there's a reason for it. And I just want to kind of give you guys a little bit of an understanding on that. I hope I didn't create more questions than I answered. But anyway, that's just your little learning tidbit for the webinar tonight. I thought it would be interesting, something a little bit different, and something that I'm, fairly well knowledgeable about because I was there and I used to do it. So any of you who are in the science field, you obviously have my respect, and keep doing what you're doing if you love it. If not, you can get out like I did. Hey, girly. Tina's clomping around. But yeah, want to thank everybody for coming out this evening. Thank you so much for coming to the webinar and listening to me give you a little bit of a insight onto pharma companies, how they operate, and why they do what they do, and drug pricing in general. Really appreciate all of your questions this evening. If you aren't able to make the webinars, please make sure you PM me your questions before we start the webinar, and I will do my best to make sure that we get those answered while we're here on camera and you can see them on the replay. So guys, have a great rest of your weekend. Relax, take it easy. Let's see what happens on Monday with the infrastructure bill and Delta variant. So we're going to keep a very close eye on those. You should too if you're in the market right now. As I said, be very cautious. That is our if you get one thing out of the webinar, you could be like, I'm never going to remember that drug discovery stuff. That's fine. You don't have to. But if you remember one thing, this week is a week for caution, guys. So be very careful. Take profits sooner, and don't be afraid to hedge. Guys, we will see all of you in Discord on Monday. Good night, everybody.